SMB holds team monthly reviews to help traders grow their trading business. During these team monthly reviews, traders inevitably share trading problems that they are facing. Real traders run into real struggles that require real solutions, and we discuss these real solutions with them. Today, Lance and I will discuss 3 of the trading problems that arose during this month's monthly team meetings on our desk at SME Capital, and then most importantly, the solutions for these common trading challenges. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. We hope this video gives you real solutions to make real progress with your trading. Let's discuss 3 important issues that came up during our team monthly meetings this month and offer you guys some solutions. So we're sitting in our conference room, Lance and myself and the teams and the traders, and they're presenting how they did for the month. And inevitably, they're going to go over what they did well and what they did poorly. And Lance and I, as well as other support at the firm, are going to help them with some solutions, talk through some solutions, and get them thinking about this so they improve next month. So, one of the things that happens at a prop desk is traders start to try and add a new strategy to their business. And there are real growing pains when they're starting to learn a new strategy. And there is one particular strategy that a couple of the traders on the desk are trying to learn, and they've been deploying them over the last quarter. And unfortunately for a couple of these traders this month, they expressed that they lost too much money deploying these new strategies. And anyone who's done this, you feel like a dope. You should not have lost as much money as you did. You should stick to what you do best. And it's particularly painful when you lose too much in a strategy that's working out. And you're also really excited that you've learned this new strategy, and you're excited about the potential that this new strategy can have for your P&L, and you're excited about branching out as a trader, and you're excited about increasing your bandwidth as a trader, and you can just visualize yourself as this bigger, better in terms of making more P&L, this bigger, broader, stronger, better trader, and that's your mindset. And then you start making some trades and you lose too much money. That can be pretty frustrating. I'm sure this has never happened to anybody watching. I'm sure this has never happened to Lance. It has definitely happened to Lance and myself. And it's just so unnecessary. The unnecessary part being losing too much. There are growing pains. You're going to make mistakes. You're going to take a step forward, a half a step back. That's part of actually burning in the new strategy. So it's laudable that these traders were expanding their playbook. AMC this month was their nemesis on the new trade that they were burning into their playbook. They didn't know, admittedly, as much as they thought they knew. There needs to be a process for growing out a new strategy, and we don't want this to happen to you. The trader presented some solutions, and then we added some other solutions to you. Whenever there's a problem in your trading, you want to identify it. That's the first part. But then, what has to happen next to be a professional trader is you have to come up with a solution. And you have to come up with an effective solution. It's not good enough to just identify a problem. It's not good enough also just to come up with a solution. You have to come up with an effective solution. And then it's not just good enough to do that. You actually have to be measuring how effective the solution is for you. So working with this trader on the growing pains of a new strategy, we identified these ideas as a solution. Build a business plan for your new strategy. Anticipate it taking longer than you think to add P&L. You need risk limits for your new strategy that makes sense. Plan to increase your risk from success. Tag and measure your trades, keeping detailed stats. Have an easy money review. Have an easy money monthly review on the best trades in the strategy each month. Lance, I know damn well that these are things we've dealt with in our trading career. Thoughts on solutions for the growing pains of a new strategy?
Yep. So first of all, I agree with you where it is totally laudable to expand your playbook,
100%.
to want to grow your edge, to learn and take advantage of more opportunities. But I think what so commonly happens is, especially if you're a more experienced trader, you have this wonderful thing called ego. And if you're used to trading 10,000 shares on a strategy and risking tens of thousands of dollars, it seems laughably silly to risk $1 or trade with one share. But the reality is, we have that risk allocation for strategies where we have real proven edge and we have built a business over months and years. That's so different when we're developing strategy. And so even though it's so emotionally hard to follow, the first thing I recommend traders do is trade with the smallest size possible. We are not here to make money in strategies we're building out initially. We are here to simply collect data. It is not until you have that data and that proven track record and that you've hashed out the different nuances, you've hashed out the different things that can go wrong, you've dealt with things like borrow costs, you've dealt with things like buy-ins, you've dealt with fat tail events and what the true risk is. Until you do that, I recommend the minimal size possible. And what you do eventually from there is you build up that track record and you grow slowly. Because the number one thing that you don't want to happen is you're putting in all this effort and you take a big rip and that demotivates you, or that leads you to wrongfully conclude that you do not have edge in the strategy you're building out. It's too early to say, right? And so you don't want to prematurely end that exploration until you've truly collected data and gone through the pains you need to on the smallest size possible to stay with it.
What we'd love for you guys to do, for all those people watching, is in the comments section, if you have best practices that have really worked for you that we haven't mentioned, that have helped you grow out a new trading strategy, share that with us, share that with our community. Let's move to trading problem number 2 that arose from our team monthly meetings. And this is increased sizing ruined my month. This is a problem that one of our developing traders ran into this month. He's somebody we love on the desk. Hard to find somebody who works harder than this particular young trader. Somebody that, Lance, I know you ran an office for a significant period of time. Like, this is the type of trader you really root for. You root really hard for. And this is somebody who, ironically, had his best month ever the prior month. Best month ever. Lobbies the risk manager for more size. He gets it. He's so excited to be deploying this larger size the next month in the marketplace. And you may be able to guess what happened next.
The old story of Daedalus flying too close to the sun. We have all been there, and I've seen it happen so many times when I was running an office.
Come on, this has never happened to anybody in the trading community who posts on Twitter.
Yeah, of course. Yeah,
Just
never
get
on
more
never
size
on Twitter.
and make more money.
Only in the real world. Yeah.
So this has certainly happened to me, and this has happened to you. And this trader's on one of the best teams at our firm. Somebody who, if I got to hire 10 people a year and I could hire 10 people like this person, I'd be super excited. And so he gets his new size, eager, excited, passionate, ready to go, down 2 stops for the month. And for those of you who don't follow how we think about our results, that's not good. Down 2 stops for the month, bad. Certainly, that's not good. And it turns out it was all because of his sizing. He thought B trades were A trades. too many of the B and C trades were sized like A trades. He sized too small. He rushed some trades to put on this new size. And these are very common things that happen when you get additional risk. And so he had to come up with solutions for sizing. He identified the problem. Now he's got to come up with solutions. He's got to come up with effective solutions. And those solutions that he came up with and then we assisted and supplemented on are refine your playbook, accountability. He was going to share all of his sizing on all of his trades with his teammates. He was going to ask for feedback on his trades in real time to gain a different perspective. Maybe some of those B trades that he thought were A trades, maybe somebody on his team could have helped him see that they weren't as good as he thought. Build better rules for your trades. So some of the trades he was taking too many times. Some of the trades he needed much clearer see it moments before he entered. Update your watch list. This is actually, I haven't heard this during a monthly review in a really long time, and I thought this was quite innovative. Update your watch list throughout the day. So we all have watch lists before the open, and this trader surmised that if he updated his watch lists throughout the day, that this would actually help him get into better trades. That's a clever idea. Patient with those entries, fight for price. A daily report card on your sizing improvement. We've got this issue. We've got to be intensive and singular in our focus about getting better with this issue. We've got to get this right this month. The way you do that is by focusing on it. So his daily report card was not going to focus on his trading or his stock selection. It was going to focus on one thing, sizing. And one thing I asked him to do and for him to start visualizing and to think about is to commit to success by next month. That he was going to come back during our next team monthly review and he was going to have made improvement on his sizing and share that with all of us. Lance, thoughts on some of these solutions?
Yeah, well, so having referenced Greek mythology, I think I now need to reference the great Mike Tyson, which is everybody has a plan until they get hit in the face. And I think so often when traders get these size increases and these risk limit increases, exactly what played out here tends to happen. And it's frustrating, right? And so I think the number one step you can take to start things off is anticipate there being road bumps. Don't go so wild with your size increase that if you do end up with a loss or a string of losses, that it ends up just debilitating and demotivating, and then the opposite happens, right? Gradual and slow and intentional is so important. You want to set those guardrails and those expectations beforehand. Are you actually in a position where if you have a couple trades that don't work out, it's not going to affect your psychology? So that's first of all, do so prudently and with the guardrails. Now, the other thing I like to point out is you really want to increase your size on your easy money trades. That's something I stress a lot here. And your easy money trades are the high probability layups for you. They are the little free throw shots you take. They're replicable, they're common, and you know you can pull these off when you need to. And so if you have a trade that's kind of like a home run trade where it's a 5 or 10% chance of winning, what are you going to do if you end up losing the first 6 or 7 times in a row on increased size? What's going to happen is you're going to end up taking that loss, then need to start scaling back and going smaller. So focus on sizing your easiest layups first and do it gradually and then build on that. And so often that's the little trick to help people size up that really gets them going. Rather than biting off more than you can chew in some of the home run plays, find your easiest plays and very systematically and gradually increase it throughout the month.
You know, I was thinking of you recently while I was practicing with my son. So we went out to shoot around with my son and my daughter and helping them get a little bit better at their game. And I was working with my daughter on one rim, and my son was shooting by himself on the further rim, and he was getting discouraged, and he came over and he wanted to stop, and he's like, I can't make any shots. I want to go in the car and wait in the car. And I said to him, and I left my daughter and I walked over with him back over to his hoop, and I said, look, let's make things easier. I was watching him out of the corner of my eye, and guess what he was doing? And anyone who has kids who are learning to play basketball, you know what I'm going to say. Out of the corner of my eye, I see him like hoisting up Steph Curry 3-pointers, which he can barely reach the rim at the age he's 10. He can barely reach the rim. Of course, he's not making any shots. And so we went over to the rim, and if you've played basketball before, there's a way to start when you're shooting, which is you take the ball with one hand and you sit right under the basket and you just shoot the ball, and you just get your form down right in front of the basket, and you go through that exercise for a couple of minutes, and then you make some layups, and then you move back and back and back, but you start with the easiest shots. So this does not just apply to trading, but it also applies to coaching your kids playing basketball.
Which is why I might be the next Coach K.
Yes.
Heard it here first.
Let's go to the third trading problem that arose this month, which is you win or lose the game before it's played, game planning. So Microsoft had breaking news, certainly a significant news catalyst, by announcing that it had AI products to sell to its customers. They had price tags on them. There were 3 different levels. Their corporate leaders went on TV and were selling the growth of this potential idea. And this one particular trader had recognized that, and then he also recognized a little bit later that there was this similar opportunity, or so he thought, in Apple, and the stock had moved quite a bit, and he didn't make as much in that particular trade. And he said, we said to him, did you game plan after the Microsoft breaking news a potential similar trade in other stocks like Apple? And he said no. And we said, well, look, I think actually you said this pretty well, Lance. Maybe I should just let you. Well, what did you say to him?
Yeah, and so I think probably my biggest theme this month for the desk has been really training with a sense of urgency, where you can't afford to see an opportunity and not immediately master that opportunity in case the next one comes the very next day.
You know what? Can I ask our prodigious video editor to actually splice in right now the video that you did on this very topic and then come back to you?
Look, guys, sometimes trading is very hard, sometimes it's easy. We never know when the easy setups or markets will come. That's why we need to be training with a sense of urgency. If a hot market arrives tomorrow, is your playbook, your sizing, your prep where it needs to be? When the market gives us a layup, have you relentlessly studied it so that in the next one we can really push our size? Or if you missed that opportunity, have you built systems to catch the very next one? If not, we need that sense of urgency. What fired me up so much is MULN was a layup trade last week that I dissected to death in a 30-minute video. Literally a few days later, the same exact long and short setup occurs in Nikola. Too many traders missed that layup. The truth is, the trading game is a race. It is a race against time to become consistently profitable. People forget that. There is only so long you will stick to this game without seeing progress. If you're going to pursue this, you need to pursue this game with a sense of urgency. You can't afford to not push every single day. We cannot afford to miss layups. Even at the very beginning of this month, we saw a trade in MULN. I dissected this whole trade up over the weekend, posted a video for free for everybody to enjoy and learn from. Luck will have it, a couple days later, Nikola did the same exact pattern. It was almost just textbook, similar to all the concepts I discussed. And that's how the month kicked off, and that was a theme all throughout the month, where you had these trades that would almost come in pairs. So you got the Microsoft AI headline, and there's traders out there that were busy with other stuff or studying other things, building up other playbooks. But guess what? This is a job where every day counts. You cannot wait a week or a month to learn that play. You cannot wait a month to study MULN. You cannot wait a month to study Nikola, and you couldn't even wait one day to study the Microsoft, because the very next day we got that Apple AI headline. It wasn't quite as big, it wasn't quite as strong of a headline and article, but nevertheless, it just goes to show that you cannot rest on your laurels at this job. You never know when that amazing market opportunity is coming, when that amazing active opportunistic market is coming. When will the next 2020 and 2021 be? If it's in a couple years, will you be ready? Will you have the risk limits and the account that you want to fully capitalize on some of these unique markets? I don't know about you, but every single time there's a big opportunity, I do not even want to wait a day and take that risk. You need to make hay while the sun is shining, and part of that means as soon as possible, learning the lessons and extracting them from the market so you can immediately incorporate them for that next opportunity, not the third, fourth, or fifth.
You know what's interesting about that? So one of the things that we added a couple of years ago as a major part of our internship program was the ability for people to compete throughout the day. They can compete on their best AM idea. They can compete during the 11 o'clock meeting. They can compete during the reading the tape sessions. There's all these things they get a chance to compete at throughout the day, beat all of their other colleagues. And we just actually sat and was going over whether or not we were going to move somebody from one step to the next in terms of our internship. So there's a junior internship, then a senior internship, and then a decision to be hired. So when you're a junior internship, we decide whether or not you should be a senior internship. When you're a senior, we should decide whether we're going to hire you. And I can tell you that I was asked about one particular person and what I thought of that person as we're making decisions about whether or not we're going to move this person along. And I said, I think the person's pretty smart. I see something there. And you know what Jeff said? Jeff said, he's not hungry enough. I don't see the hunger. I don't recommend we pass him to the next stage. And that person is not going to be coming back. I think he has the ability intellectually to do it. I actually liked him very much. I was impressed with him. But he just didn't have the hunger, according to Jeff, who works with these traders much more closely. It's important.
And I think so often that hunger and that urgency also comes through in the depth of your solutions. So one other thing that happened this week is one of the SMB traders is really working on expanding his playbook into a new area. And I asked him whether he caught an opportunity in that playbook. And he said, no, I didn't see the ticker early enough. Okay, great. That's fine. We can accept that. But I pushed further. How are you going to spot the next one? What did you learn from that opportunity? And his response was, okay, I'm going to make a scanner using some of the SMB technology to find and see that opportunity more proactively. But I kept on pushing him. Okay, like you're going to make that scanner, but that's not enough. How are you going to make sure that you see that scanner and that you're reading it and checking it throughout the day? And his response was, I'm going to then put calendar alerts midday to remind me to keep on checking the watch list on my scanners. And I said, great. But let's say it's an active day and you get busy. What's another step we can do further to further safeguard not missing a single opportunity in that new playbook? And his idea then was, I'm going to share that scanner with other people as part of my trading pod so that they can help me catch these opportunities so we can all win together. And that's what the truly great traders do. When they miss an opportunity or when they could have done better, they dissect every aspect of that. They learn every lesson there is, and they don't just put one safeguard to catch it. They put in layers upon layers of safeguards to make sure that they catch the opportunity, that they're sized for the opportunity, and that they're taking full advantage of every single day. Those are the traders that are trading with that sense of urgency.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7, and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training.
That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.